Hi everyone, name is Kai. I look after the industry groups and partnerships. We are sectorizing how trade sales approaches our multinational clients in the various sectors. Super excited to be here at Sibos, working with our bank clients and exchange thoughts and see how the World Trade Bank can help them. Yeah, I think it's a great question. I think it goes two ways. One is what you can't control, and what obviously comes to mind is war, geopolitical tension. You have shift in supply chains triggered by a pandemic, which is not so far away. So all of that is not in the control of our clients. So it's then about what can you control. And I think one deep aspect of how our clients approach the change in supply chains is visibility within your supply chain. Clients are realizing that their supply chain may be too long, and they only realize it by getting visibility within the supply chain. Are you reliant on a single supplier? Are you reliant on a single logistic route? Are you reliant on a single supplier market? All of that you can change, and we see our clients changing this. 9 out of 10 clients telling us that they're going deeper into the supply chain. That came out clearly through the Trade Pulse survey we've commissioned, where 2,000 clients answered exactly that question. The other big aspect is the financing, the prioritization they want to give to their suppliers. 6 out of 10 clients say working capital needs are really important in order to get priority within their own supply chain. If it comes to innovation within the supply chain, I think it's about the partnership we are driving here and the emergence of marketplaces. And let me break this down. I think there are 3 ways to look at marketplaces. Client-driven marketplaces, they can be on the distribution side, enable their sales, and they can be on the supply chain side, managing the procurement. So large clients start creating their own marketplaces for the procurement side as well as the supply chain side. And then you have third-party marketplaces. You have a platform bringing buyers and sellers together. And that's for us a super exciting area, because this is when you merge cash and trade into embedded finance. So that is something you can be excited about. You should ask me soon again, probably by year end, we are announcing one of the largest marketplaces solutions we've built. So I think that's a new frontier for trade, embedded finance within those marketplaces. And I think if I use 2 keywords, one is visibility and the other one is simplification. So visibility is understanding the ecosystem of your supply chain. And I think where trade finance helps here is getting visibility within, for instance, a domestic supply chain through deep tier financing solution. So that is not so much a technology question, this is about the jurisdiction question. So for instance, in a market like China, where we are enabled for deep tier financing through various platforms and ecosystem, we can support deep tier supply chain financing, answering that visibility question, because we understand the level 1, level 2, level 3 supplier and give the visibility back to our clients and channel the financing where it's actually needed within the supply chain. So my expectation is that with jurisdiction adopting to that technique, you will see more cross-border deep tier supply chain financing outside, for instance, a market like China. The other aspect is the simplification, and that's really exciting for us, because if I speak to clients like a treasurer and he shows me a big a glass bowl of tokens and dongles to log into each and everyone's proprietary bank channel, that's not an easy to bank solution. What you need is a single entry into a bank to run your supply chain, and this is where the innovation we are bringing to the table from an 2-way end-to-end ERP connector for me is a game changer. We become the de facto platform bank, which enables a single onboarding experience directly connected with your ERP system, both the receivable side, your DSO, and also the payable side on your DPO. It's a solution which is a single point of entry with a single file format, with a single onboarding experience. HSBC becomes your platform bank, and on top of it, you get the balance sheet commitment of HSBC to underwrite your whole supply chain. So you get the best of two worlds, the platform as well as the financial stability, gaining, again, the visibility part we talked about in deep tier financing, as well as the simplification. I think it's a really important question. You can only provide solution to your client if you understand the respective ecosystem, and each and every supply chain for the respective sectors have different answers. You've asked about the agriculture sector, and I spent the last 3 days of last week in Geneva talking to many of the agriculture trading companies, and I'm less worried about the agriculture sector. The clients have found their solution, even in a time of crisis, to find a way to provide food supply in the agriculture sector to the client. Amazing works by our client. But what is definitely changing, if you look at the end-to-end supply chain, it's not only the payable side, it's also the receivable side, and there's a side in the middle. So if you look at from a client perspective, you have the DSO, you have the DPO, so the days sales outstanding, and the days payable outstanding, and in the middle of your supply chain is a DIO, the days inventory outstanding. And that is where we are partnering with a couple of clients to find inventory solution for their supply chain. The biggest current application for this is in the tech sector. Look into the growth of the data center driven by AI, the digitization of the world. There's a massive need for data center, and those data center, a lot of them require also inventory solution. So getting our heads around on how we help our clients in the tech sector with inventory solution, definitely part of the supply chain toolkit we are bringing to the market. A 25-year question, that's a very deep glass ball I'm looking into this. One is definitely the visibility we talked about earlier. I think traceability and visibility within supply chain, that will be a given going forward. The treasurer, the procurement head needs to understand how his supply chain operates. Is it too long? Can it be shortened? What is the behavior of your level 3, level 4 supplier? So that is definitely something we are seeing. I would also forecast you see data-driven model. We see the emergence of data-driven model who forecast interruption in your supply chain, so that our clients can act real-time on changing supply chain, creating an alert and saying you need to reroute, you need to reset the way how you currently run your procurement. So these data-driven model will help. And if I summarize this in a world, in one word or one sentence, I think resilience becomes the new efficiency. Everything I understand about that business and how supply chain operate, it boils down to this very sentence, and I think this is here to stay. Resilience becomes your new efficiency.